Welcome back to the Hectare Trading Grain Market Update, where we brief you on this week's events and what's behind movements in the market. The Hectare Trading Midlands benchmark price for feed wheat is £171, up £1 from the previous week. Brent crude oil experienced extreme volatility this week, pushing towards $120 a barrel on Monday, amid threats to shipping in the Strait of Hormuz, before retreating below $100 a barrel following President Trump's suggestion that the Iran war could end soon, alongside an agreement by G7 nations to release strategic oil reserves. Against this backdrop, the March WASDE report was largely treated as a non-event by the market. Global wheat ending stocks were revised down to 276.96 million tonnes. This is still near a 5-year high, and the global wheat market remains comfortably supplied. Having finished last week above £180, the London feed wheat contract for November fell back to £178.60 on Tuesday, before turning upward again. Meanwhile, the old crop May contract gave back some of last week's gains to finish Tuesday at £170, but recovered to reach £172.50 at Thursday's close. Many farmers are now forward selling their 2026 feed wheat on Hectare Trading, locking in prices across Scotland, the North East, the Midlands, and Central and Eastern England. The Hectare Trading Midlands benchmark price for milling wheat is £184, up £1 from the previous week. South Korean millers agreed this week to import 32,000 tonnes of milling wheat from the US. Meanwhile, France Agrimer reduced its forecast for French soft wheat exports outside the EU to 7.1 million tonnes, pushing projected domestic end-of-season stocks to 3.39 million tonnes, the highest level in 16 years. On Hectare Trading, farmers have been forward selling Group 3 wheat in Yorkshire and the Humber, Group 4 hard wheat in Northumberland, the Scottish Borders in Yorkshire, and Group 4 soft wheat in central Scotland. Similar to London, Paris milling wheat futures have been tugged in two directions by global turmoil and supply fundamentals. The May forward contract dropped nearly €6 to €204 on Tuesday, but recovered well to end Thursday at €209.25. The Hectare Trading Midlands benchmark price for oilseed rape is £439, up £2 from the previous week. Chinese demand for US soybeans, a key driver of the global oilseed complex, remains sluggish as buyers continue to favour cheaper Brazilian supplies, while the market is closely watching for any developments from upcoming US-China talks. In Canada, the latest planting survey indicated a strategic shift towards oilseeds. Growers are expected to favour canola over wheat, a move that will only be increased by China's decision to lift tariffs on Canadian canola. Crude oil volatility has again driven Paris rapeseed futures this week. The May contract rose to €514 on Monday, dropped to €501 at Tuesday's close, then recovered to finish Thursday at €515. The Hectare Trading Midlands benchmark price for feed barley is £158, up £4 from the previous week. The latest AHDB cereal usage report indicated that demand for barley by UK brewers, maltsters and distillers has fallen by 19.2% for the season to date, July to January, compared to the same period in 2024-5. Sellers in the West Midlands have been selling feed barley for March movement at £164 a tonne. We've also seen some forward selling feed barley in North East and Central Scotland and Yorkshire and the Humber, along with malting barley in the East Midlands. Once you've signed up to Hectare Trading, you can access the latest market insights. By filtering on region, you can see our regional benchmark price estimates, our market analysis, the latest prices that have been offered to farmers, as well as market commentary, futures, and access to wider market news. That's all for this week. Don't forget to sign up to get the latest market insights and click subscribe to get the next update.